Here's the latest. Arkhouse and Brigade Capital raising their bid for Macy's, now offering $25 per share to take the company private. Macy's still reviewing the offer after unveiling a restructuring plan which would close a third of US locations. Sucharita Kodali of Forrester Research joins us now for more. Sucharita, can I ask you then just bluntly up front, does this get the deal done?
Well, I think it really depends because there are still a lot of unknowns. Macy's doesn't have the answers that they had asked for before on how the financing was going to happen. And the buyers, it sounds like they don't necessarily have all of the details from a due diligence standpoint that they had asked for either. So there are a lot of things that are still in the air. The numbers seem to look attractive, but whether or not they can actually make it happen in this high interest rate environment, I think, remains to be seen.
Let's say they can. Do you have a decent understanding of what would happen to this company?
Well, typically the playbook when there is an acquisition of this sort is that usually the assets are harvested and there is essentially a slow decline in the retailer. And the biggest assets here are really the real estate properties. What's going to happen with that Herald Square store and other assets that they may have that are physical bricks and mortar stores. So that's really the question. I think that they will probably try to persuade the shareholders of a slightly different story, that they will preserve jobs and they'll preserve the locations that have been announced that they'll stay open. But I think that it is hard to envision that they will be able to turn that the department store sector in general, or the apparel sector, is going to have a major turnaround that would reverse the fortunes of Macy's anytime soon. So I unfortunately do think that this is probably headed into the direction of maybe, the outcomes of some of the other private equity retail acquisitions that have happened over the years.
Where it really is about the real estate more than anything else. Given that, what do you think has gone so wrong at Macy's? Do you think it's just an environment issue that the department store is having a hard time, or do you think that it's a Macy's-specific issue that's caused its shares to drop 10% this year and a whole lot last year and the year before?
Well, I think a lot of it are the macroeconomic factors. The truth is that the entire department store sector has been under pressure pretty much since 9/11. It kind of peaked around the year, 2000, 2001, and has been just on a downward trajectory since then. A lot of it is due to competition. It's everything from companies like Amazon that have been in their space. It is the mass merchants that have encroached the apparel category more and more. It is specialty retailers like Sephora. And increasingly now, it is new Chinese upstarts like Shein and Temu that are absolutely eating into these kind of sales of the department stores. Now, has Macy's executed badly? I think that they have done pretty well given the circumstances. They've leaned heavily into sectors like private label, apparel, and other merchandise. They've opened these small format stores. They have leaned into luxury with Bloomingdale's, which is relatively resilient. But the truth is, it's not enough. The Macy's flagship brand, which had been, for the most part, a series of a lot of department store acquisitions over time, it's just been really, really challenged. This is one of the apparel is one of the toughest sectors in retail overall. Department stores are really challenged even within the apparel sector.